Hey everyone. When most people think about investing in artificial intelligence, their minds instantly jump to the giants, the mega cap names, the companies that dominate headlines every single day. Nvidia, Microsoft, Alphabet, Amazon. These stocks feel safe, familiar, and obvious, and because of that, they get almost all the attention. But here's the thing most investors completely overlook. The next major wave of AI growth may not be led by the companies building the models. It may be driven by the companies quietly building the backbone that makes all of this possible. Because AI doesn't live in the cloud by magic. It needs massive computing power. It needs specialized GPUs. It needs data centers that can handle extreme heat, enormous energy loads, and nonstop demand. And as the industry shifts away from experimentation and into full-scale deployment, the real bottleneck is no longer ideas. It's infrastructure. That's where a lesser-known name has started turning heads on Wall Street. Nebius, ticker symbol NBIS. This is not a company most retail investors were talking about a year ago in Dewey, but suddenly it's showing up in analyst reports, institutional portfolios, and high-level AI conversations. And one comment in particular sent a very clear signal to the market. Wedbush analyst Dan Ives, one of the most widely followed voices in tech investing, recently named Nebius his top AI infrastructure pick for 2026. Not just a good stock, his top choice, and he went even further. He said Nebius looks ripe for acquisition by a hyperscaler. Think Microsoft, think Google, think Amazon. And that single idea that Nbis could become a strategic buyout target instantly changed how investors view this company. So, what exactly is Nebius, and why is it suddenly being discussed as a future cornerstone of AI infrastructure? Nebius is headquartered in Amsterdam and operates across Europe and North America. It provides full-stack AI cloud infrastructure, focusing heavily on GPU-accelerated computing. This isn't general-purpose cloud space. This is high-performance, AI-optimized capacity built for companies training and running large-scale models. Nebius designs and operates modern, sustainable data centers. These facilities use liquid cooling systems, ultra-high power density layouts, and the latest generation of GPUs, the kind of setups hyperscalers and AI-native enterprises desperately need right now. What makes the story even more interesting is the company's origin. Nebius emerged from the restructuring of the former Yandex infrastructure business. After that transformation, it became a standalone AI infrastructure platform, while still maintaining exposure to adjacent technologies like autonomous vehicles and education software through subsidiaries. In other words, this is not a startup experimenting in a garage. This is industrial-scale infrastructure with deep technical roots. And the market has noticed. Nebius currently carries a market capitalization of roughly $23 billion. And its stock performance this year has been nothing short of explosive. After struggling for a period following its restructuring, shares began to climb sharply over the summer. One major catalyst was Nvidia, revealing it had taken a stake in the company, a move that instantly validated Nebius's technical credibility. From there, momentum accelerated. New contract announcements with major players like Microsoft and Meta added fuel to the fire. By October, the stock had surged past $140 per share. Even after pulling back from those highs, Nebius is still up roughly 225% year-to-date. That kind of move doesn't happen quietly. But with explosive gains come serious questions. At current levels, Nebius is priced for perfection. The stock trades at a trailing price-to-sales multiple in the mid-50s. To put that into perspective, the broader sector trades closer to 4 times sales. Even Nebius's own historical average valuation sits closer to the mid-20s. In simple terms, the market is already assuming Nebius will become a foundational piece of global AI infrastructure. That belief may turn out to be correct. But it also means the margin for error is razor-thin. Any slowdown in customer demand, any pricing pressure, any misstep in capital spending, all of it could hit the stock hard. At this valuation, execution matters just as much as long-term vision. This is why Dan Ives' comments carried so much weight. When he publicly labeled Nebius the most likely acquisition candidate among so-called AI neocloud companies, the stock jumped roughly 14% in a single day. Investors took it as confirmation that Nebius isn't just growing fast, it's strategically important. For now, there's no confirmed deal on the table. But even without an acquisition, that endorsement alone boosted trading volume, investor interest, and overall visibility. And if a 2026 deal ever materializes, it would be transformational. Behind the headlines, the fundamentals are moving fast. Nebius reported a very strong third quarter in 2025. Revenue came in at $146 million, up an eye-watering 355% year over year. That growth was driven almost entirely by its core AI infrastructure business, as new large-scale contracts went live. Profitability, however, is still a work in progress. The company posted a GAAP net loss of nearly $120 million for the quarter, wider than the year before. That reflects aggressive expansion, heavy depreciation, and the massive upfront costs required to build AI data centers. But there's an important detail many people miss. Adjusted EBITDA loss narrowed dramatically, falling to just over $5 million, compared to nearly $46 million a year earlier. That tells us revenue is beginning to catch up with operating costs, even as the company continues to scale. Of course, scaling AI infrastructure is expensive. Operating cash burn reached about $80 million, while capital expenditures surged to nearly $1 billion in a single quarter. That highlights just how capital-intensive this business really is. The good news? Nebius ended the quarter with approximately $4.8 billion in cash. Thanks to recent equity and debt raises, the company has the financial firepower to keep expanding without immediate funding pressure. Management is not being conservative. Nbis is targeting an annualized revenue run rate between $750 million and $1 billion by the end of 2025. At the same time, it plans to scale its connected power capacity to between 800 and 1,000 megawatts by 2026, with even more capacity already contracted. CEO Arkady Volozh has stated that current capacity is effectively sold out, and future capacity is already spoken for. Losses are expected to continue in the near term, but the strategy is crystal clear. Scale first, optimize later. Since that quarter ended, Nebius has continued to make headlines. In mid-December, the company launched Nebius AI Cloud 3.1, powered by NVIDIA's new Blackwell ultra-high-performance GPUs. Nebius stated it became the first cloud provider in Europe to run NVIDIA's GB300 and HGX B300 systems in production. That's not marketing fluff. That's a technical milestone. The company also reiterated the significance of its $3 billion AI infrastructure agreement with Meta, announced earlier in the fall. That deal alone adds substantial revenue visibility and backlog. Wall Street overall remains bullish, but cautious. Goldman Sachs reiterated a buy rating and raised its price target to $155, citing accelerating demand and improved visibility into large contracts. D.A. Davidson also maintained a buy with a $150 target. CICC initiated coverage with a target around $143. Across the board, analysts rate the stock a moderate buy, with an average target near $150, implying roughly 70% upside from recent levels. But every analyst includes the same warning. The valuation is demanding. The investment case depends on flawless execution, disciplined spending, and sustained demand from enterprise customers. If any of those pillars weaken, the stock could feel it quickly. Nebius is not a low-risk play. It is a high-conviction bet on the future of AI infrastructure. And as the world moves from building AI models to deploying them at scale, companies like Nebius may end up being far more important than most people realize, long before the rest of the market catches on. Subscribe to my channel. This is not financial advice.